Hey everyone, David Trungale from TraderTours.com. A video here to tell you that I am now an oil investor. I've actually bought into crude oil. Amazingly, I have not touched commodities for many years, at least in the sense of going long on them. And a couple of things to note right off the bat. Schwab.com is the broker that I recommend trading with online. Great service. I've used them for several years, and looking at the screenshot of my trading account, you can see, my investment, we're talking peanuts. I dumped about $2,900 into this trade because oil is a commodity. I'm not certain about this trade. It's not a sure thing. It is a volatile market. We're living in this panic COVID-19 scenario. I know the coronavirus is a pandemic, but I like to call it a panic because it is. So there's still a lot going on. So I figured, what the hell, $2,900 is not much, and I think cash is the best play. But hey, I'm up $477.96 in the last few days by dabbling into this trade. So USO is a symbol. It's an ETF. Again, be really careful. And I'm not typically a fan of the ETF. If I had my way, I would prefer the physical possession, but I came to the conclusion rather quickly that holding onto physical barrels of crude oil is just not all that practical, unless you own 50 acres of property or have access to a big warehouse or something. It's not like a commodity such as gold, where you can put a few ounces of gold in a safe and that's all there is to it. So the ETF does not track the price per barrel perfectly, but it's just something that I'll have to manage with on this trade. So why did I do this? Well, just looking at the graph, very interesting, everything that's going on in the world today. You can see this dramatic plunge from 60 a barrel, give or take, all the way down to about 11 per barrel. I know the graph shows 20, but this is such a long graph going back to 1950 that the shorter term stuff is hard to pick out. And notice there's tons of support in this range from, we'll call it about $10 per barrel to $20 per barrel. And I normally don't like to bottom fish. I normally am buying actually when a commodity or security is at its 52-week high or all-time high, because I want to trade with the trend, and I'm certainly not doing that here. So that is interesting that I am going against my own principles. But when something falls so quick, and from a percentage standpoint, this is just a dramatic drop like we saw back in 2008, there does tend to be a rebound of some sort. Now, I have no anticipation of oil going way back up to 140 a barrel anytime in the near future, and who knows, this is way too speculative. I don't know if it will ever get there, period. Maybe it will, maybe it won't, but I think some sort of a bounce back is warranted, just because not only of the support, but for some other reasons, and that is being a contrarian. The investor sentiment out there is so negative. You can see these articles just tarnishing the reputation of any oil investor. You can see oil investors are doomed even if oil prices recover. Buyer beware. Retail investors buying USO's oil ETF. And Forbes puts out some really good content, and then they put some content out that I disagree with. It all depends on the analyst who's publishing the article, but there's a little illustration of gas prices, $1.39 for a gallon of gas. And it's funny because a couple weeks back, people were saying gasoline was going to 50 cents per gallon. We're not talking about investors. I'm talking people I know on a personal level, friends, family, and started to listen to them. And I thought, if everyone's so sure that's going to happen, as a contrarian, why can't the exact opposite happen? There was all that hype about oil prices being negative, the oversupply, no delivery on the futures contracts. So I just figured, the sentiment, let's go against it. And that's what I've done. So we'll see. Moving on, closing this out, gold, it's actually looking better. I'm not buying it. I'm not selling it, but I just figured I would do an update. I know it's a hot topic to talk about. From a 1-year perspective, the graph is going up, 52-week high. Actually not super far off the all-time high, which was around 1,900 an ounce, give or take, back in 2011. When I look at these charts, I always try to be impartial. What does impartial mean? Well, it means that I'm trying to be unbiased. I do not want to be emotional. I'm just looking at the actual facts as to what has transpired. That's how you want to look at graphs. That's how you want to analyze investments, right? You want to be impartial, look at what's actually happening, opposed to just theories or what people are saying. So, and this leads me to my next point. People were saying, hey, why didn't you buy gold in 2014? What about 2015? Well, for the better part of 6 years, gold was really stuck at that $1,200, $1,300 per ounce price, and it's not that much higher than that right now. It's had a nice pop up, but it's not like dramatically higher than that. And when you factor in something called opportunity cost, which is, okay, you're investing time, money, resources, or whatever towards a certain investment, what could you have otherwise done with your time, money, or resources? Meaning, rather than sit on something that essentially was going sideways for many, many years, from 2013 to 2019, it was way more advantageous to be into U.S. equities, buying stocks like Amazon or Google or McDonald's, right? Those had phenomenal percent returns over that time frame. So that's why I wasn't promoting the idea of buying gold during those years, and I'm still not necessarily promoting it now. I'm just saying, hey, again, I don't cheer for assets to go up or down. I'm just looking at what I think could happen, and as of right now, the trend for gold is up. Silver, I don't have the graph up, but I'm still not a fan. Not really a big fan of silver. I can certainly make a separate video on that. So gold looking better. Currently I'm in on oil. I don't know for how much longer. I might take a few $100s and just run. But I don't know. I think we could see a bounce up still. So remember, commodities are volatile. This is my final statement here, guys. Many people should outright avoid them. I do not believe that gold is money. I do not believe silver is money. That is a theory that has been floating around for a while now. No. If you're worried about the economy, if you are concerned about losing assets, money, whatever you want to call it, just put your money into cash, bank CDs, have physical cash. That is the safest spot to be. The US dollar remains as the world's reserve currency, and I think it will continue to be the world's reserve currency. Cash has always been king during uncertain times, during recessions, during the Great Depression. I think that will remain the same. So my view has always been consistent in that. So there's my update. Very early here in May of 2020, still a lot going on in the world with the coronavirus, a lot of uncertainty and panic. I know it's the pandemic, but again, I call it the panic because I still think that a lot of people have overblown this thing in terms of, fear and exaggerated the situation. It is, I know, an illness and highly contagious, but it's not the end of the world, so I still maintain my stance on that. To learn more about myself or investment content, check out tradertours.com. Thank you for listening. Have a great day.